Welcome to the Money Collective podcast. We're here to uplift your financial wellbeing. Your hosts are me, Mel, Pearce, and Darlene New. We are the co-founders of the Money Collective, and together we have over 50 years of finance and banking experience. We provide the tools, information, and guidance to better understand your money and feel confident making money decisions. Hi, Darlene.
Hi, Mel.
How you going?
Welcome to episode 6.
Thank you so much. And welcome to everybody else. So looking forward to a good episode today. Every episode we want to kick off with a bit of a home truth.
Mm-hmm. What's your home truth today, Mel?
Well, I thought I would let you all know that my fixed rate came off. Like, I didn't have an amazing fixed rate of like 1.89% or anything like that.
What did you have?
I had about 4.5%. I fixed it in 12 months ago.
Yeah.
When rates started to go up,
Yep.
and I'm like, oh, writing's on the wall here. So I was a bit of a late adopter.
Do you know, though, sometimes some of those strategies have been quite good. If you do, you can never pick them up because you can't see the future. But sometimes, because you're being able to ride the wave a bit longer while the rates are still rising. So, yeah, it's not, it's horses for courses, and if you backed it over time, sometimes doing it late is not such a bad thing if you're still doing it in a rising market.
I did it by taking your advice at the time anyway. I remember that. You're like, just lock it in, do it.
Great.
And I was very grateful that I did, but 12 months doesn't last very long. It lasts exactly 12 months.
Seems like a blink. Yeah, I know.
And so it came off a week ago, and I'm up at 6.13%. So it went from 4.5 to 6.13. But I've been paying at 6% on my home loan right from back when rates were really super low, because he said, I think they're going to get that, go back up. Maybe when the writing was on the wall that they were going to start going up.
Yep.
You're like, I remember you saying they're going to hit 6%, just start paying everything at 6%. So I've been very grateful for that advice.
I'm so glad that you took my advice.
And I've told all of my clients to do the same things as well. So
yeah,
I suppose it's good. So the point is that it's not like I'm experiencing that mortgage cliff or anything like that where I've jumped off the edge and my world is completely different. Though I have, experienced from the lows to the highs. My repayments have changed to $1,000 a month.
Yep.
Though, because I have had all those incremental, I've obviously had my rate really low in the 2s, and now we're at 6%. So that happened. And so I just wanted to say thank you for giving me the advice, firstly, to lock it in and then to pay at that higher rate. So all my extra repayments were going into a variable split that I had, because that gives me a bit more flexibility.
And you've got in advance. Yeah,
that's right.
Some extra savings.
Yes. But now I'm not quite happy, because when my fixed rate rolled off, the bank has just given me an average okay rate that I'm not really happy with at all.
Yep.
So I'm on to them, and it hasn't resolved yet, but I do want a lower rate than what they've given me. So I've reached out to the bank, and it hasn't been an immediate quick fix, but I'm going to stay on to that so that I get a better rate.
Yeah, I think that's really, really important. And my tip would be, be that naggy person if you need to, and really, really push them for a better rate. A topic for another day is how banks give new-to-bank customers better rates than they give existing customers.
Yes.
And they don't reward loyalty. So you've got to call that out a lot about how long you've been there, and also what those competitive rates are to new-to-bank.
Exactly
and
right.
And really be, with like a dog with a bone
exactly
until you
right.
get what you want.
Yes. So I'm currently the dog with the bone, not going to let go of it. So I know that's not particularly exciting, and it's not really interesting about my home truth, about home life. It's just numbers and mortgages for me this week.
I think there's a couple of really great tips there.
Yeah.
So thanks. That's really cool. And my truth this week is I've talked about my children a bit, and it's my son again, about should I pay or should I charge him board or not? Oh,
Gee, that
what
sounds
a
like a
dilemma.
tough one.
Well, maybe Mel's going to give me the answer, and I probably know what she'll say. But
Are you charging him board at the moment?
no, I don't charge him board, and he is. He finished up a job. For those who might have listened to previous ones, I may have mentioned it. He finished up a job that he wasn't that keen on, and he's trying to work out what he wants to do with his life and next year, and he's applying to university, so I think he's going to go back to school. In the meantime, because he lived at home for nothing, he saved a lot of money, and he's a good saver, and he has his systems, which is great. But now I'm so excited for him. He is off to Europe, and he's going on the 10th of December to about the 17th of January, and he's going to some fantastic countries, and what an amazing experience. And I'm really glad that he's doing that. But, there's some things around home and being an adult that I think he needs to maybe learn a bit more about.
Teach him a lesson, hey?
Well, we all have to juggle and budget and prioritise, and I'm not poo-pooing his trip. I think that's really great. But when he comes back, I'm thinking, new year, set some new boundaries, and maybe charge board. I'm happy for input. I am really feeling uncertain and uneasy.
I listened to somebody else talking about this topic recently, and I love the way that they explained it, where they said that, just paying some board, I can't remember what the figure was that they chose, but let's say you're paying even $100 a week or something. It's going to be much cheaper than living outside of the home.
So cheap.
Like, it's so cheap. Like, you're never going to, even if, your board was $200 a week, you're not going to be able to live in a share house plus pay the utilities and groceries and for anything near that price, So it's almost like the option, hey, if you can go and live somewhere else, or you can stay at home, there's going to be some responsibility with contributing to the household costs of living. And then the person said that person, charged their child for the 6 years that they were at university, and it was something like $20,000 or $30,000, and they ended up giving the money back to the child at the end of the day.
I don't mind that too.
Where the child never knew, or the young adult, what am I saying? They're our kids forever, but like far out.
Right.
This is just the point too, that they're, hey, come on, you're grown up, you're in your 20s.
I know, he's only 23, he'll be 23 in May.
Yeah.
Come on.
So
isn't it about time you learn how cost of living in life works?
Yeah, that's it.
Yeah,
get a reality check.
I was going to say I don't mind the idea of giving the money back, but you would have seen some of our previous episodes too. We've really got to remember about what lessons or what we're taking away from our kids by giving them stuff. And I think if it's a wow moment or something that they're not expecting, possibly.
I like it when they don't expect it, particularly. But at the same time, I think there's, like, with no expectation, because what happens if times get tough and you've got that money, like, it is yours to spend,
Definitely.
Yeah.
Yeah. And I just think, kids that are, pulling weight at home and, doing their share. I mean, sometimes I feel like, we work, my husband and I work, and we love what we do, and but we work long hours and we are committed to what we do.
But the kids' mentality is so different. And at the moment, he's
home each day, and is a dinner on the table, some washing on the line, folding his washing up, when I'm coming home, sometimes I work till 9, 10 at night, doing the stuff to keep on top of everything, and I'm thinking, something's not right.
You sound like my partner. He's very much like that. He talks in all of those terms, and I just let everything wash over, and it'll be fine. But I think too, like a moment in time. So it's good to do it so that return from the overseas trip right next year, start of a new year type situation.
Yeah.
And these are the new rules. Like, it's good to set these up from, the expectations with somebody as well, to go, hey, this is it. Just have a regular adult conversation with them.
Exactly. And I think it does need to come from also that, when our kids leave home, they've got to learn to do all this stuff on their own anyway. So the more they can understand the cost of living and, things and, really sharing that stuff. I know my son's really grateful. he's that sort of, inside I know he is, but sometimes we're doing our kids an injustice. Yeah.
And it's so obvious too, like when we have these conversations, the difference between the generations. Like our expectations just don't match what theirs are. And there's I don't know what is going on. I'm yet to break that code.
That's right.
Who's got it right? Have we got it right, or have they got it right? Do we need to do the tough love that we got?
I don't know.
Because we hated the tough love, so then we're easy on the kids and let them get away with so much more stuff.
Well, it comes back to, time's our most, our best commodity, right? So, and I feel our younger generations that we're talking about, they won't spend time where they don't value it,
That's right.
And who necessarily says that's a bad thing? Maybe it's a really good thing.
Because I would say that a lot of our generation's been taken advantage of. We will go to work and then we're expected to do 4 jobs sometimes with no extra pay rise and limited chance to really reap the financial benefits of putting in. And we've been drilled into us that just do, put in the grunt work and you'll be rewarded.
Yeah.
But a lot of the time you're not. And I think they're seeing us and going, hey, I'm not doing that. That is ridiculous.
Why would I do that?
Why would I do that? Why would I do that?
Too.
My self-worth, I can see what it's doing to you guys. I can see my parents, like what you said, I've worked all day, I've come home. Why would they want that?
Why would they do
that? That looks ridiculous.
That's exactly, and you can see
that is dumb.
Yeah,
so I think they're trying to change it up. And look, I'm
I'm
happy to see how it plays out.
Too. And then because there is always 2 sides of the coin, and I'm with you. I have really no idea what's good or not. I'm really keen to see how it plays out. But you do need purpose, right? You need to know what you're doing. And even if you go and do a job or something else, even though you might not think you like it, there's always benefits or things you learn along the way that you might not have learnt otherwise. So
exactly right.
Life experience versus...
You can't just sit in your bedroom and think you're going to get somewhere. This is our mentality. I'm such an old person now. Far out.
That doesn't sound like Mel at all.
No, it sounds like me all the time now.
That's what happens when you hit 40.
Yeah,
Anyway.
It's so funny.
Yeah.
We should talk about how our kids do our makeup for us too. I don't know how to even do our own makeup.
Next truth. Okay, next episode. That is great. I'm going to talk about my experience and my daughter and makeup.
Yeah, I love that. Okay, I'm banging on that too. All right. So today we want to talk about financial well-being. Last episode, whenever you listened in, we asked you what financial well-being meant to you. Yep. And it means a lot to us.
It does, and we hope it resonates, I think.
We live our whole life, and how many times a day do we say these words, financial well-being?
Endless, and what is financial well-being? So if we start, financial well-being is around how do you feel about your money? Like when you think of money and you, what's that feeling you get in the inside? Is it keeping you up at night? Do you feel good about it? How much time do you spend thinking about it a day? Is it affecting your productivity at work? So financial well-being is how you feel about your money. And uplifting your financial well-being is all about changing the way you feel if it's not where you want it to be. So the 2 things you can really do in that space is build your financial capability, which is understanding your own money and how it works in your life, and getting more deliberate with it. And also from a capability perspective, it's understanding the products that you have or you may want to engage in, like, loans, credit cards, everyday accounts, investments, understanding the nitty-gritty of that so you can make a decision for yourself and whether they're good for you or not. And then the other component is financial resilience, which is about what would I do in case of? And really financial resilience is about your net asset position. So it's building assets so you've got options if and when you need them. And, one day you might want to retire and, you've got enough money to live on.
That resilience piece is really linked to how you feel about your money. Because if you've got not much backup resources and you've got your back against the wall and things are not looking so great financially, that's the resilience piece. It means you're not strong enough in the resilience. You haven't got enough backup, or maybe you don't have a clear plan to know what to do next. Yeah. And then capability is just all about knowing your numbers, because how do you create a plan for yourself if you don't know your financial situation? So they go completely hand in hand. You can't have one without the other.
That's right. If you don't know what you've got to work with, how can you know what to do with it.
That's right. And if you don't know exactly what you're working with or where the money's going, then we operate from this state of emotion
and fear,
and that's what impacts our relationships, you know. And we all have our own defaults. We've spoken about money personalities. It's what we'll go to and revert to. Do we just go and spend? And you know, I know, like my mother-in-law, her health, she thought that at one stage that she was going to die, so she gave up. You know, this is just a different analogy, you know. So she had a heart condition and a heart bypass, and the surgeon said to her, "You've got 10 years to live." And as she got to that 10 years, she's like, that's it, I'm done. Everything was fine. She was perfectly healthy, but she had been counting down that time and to go, that's it, and I'm going to give up. And I think that was so interesting to see her mental state do that. But then I just relate that back to money, because if we don't have a plan, some people will just go, right, well, it's it, I'm a failure, I'm done, and they just will go and spend all their money, or they'll just say, I'm no good with money.
It's the most common thing where we hear.
Other people will do completely different things. So if you don't have a really good plan or a backup, or you haven't thought about it, or stuff's not going well, then we're going to revert back to things that may not be serving us in our life. And that might be, everyone's going to do that in a very different range of ways. Yeah. So
that's it.
We're very passionate about this, and I think too, this is the feminine side of money, financial well-being, and it's a very new term. Like, I think everybody knows what we're talking about now, but it's something that nobody was talking about a few years ago.
Exactly.
Because money was all about finance and being a banker and
exactly.
What are you invested in and how's your Bitcoin going?
That's right. That's the barbecue talk, right? And it really, and people don't want to talk about, you know, when they're maybe not doing well, or, you know, how they really want to learn those everyday skills, you know, because it seems like we all should know this stuff. You know, we should have learned from our parents, or, you know, but really, well, how is it different to, you know, going to a nutritionist, or, you know,
going to the gym
or
eating healthy?
It should be exactly the same. And
and we don't put any weight on how it makes us feel. Like, we know if we eat crap, we see it on our faces, we see it in our bodies, and we're like, what are you doing to yourself? And we kind of think the same things, but we're not joining the dots. We're like, with our financial health, we have that ominous feeling that we're maybe not putting the effort in that we need to, but we don't know how to talk about it
or go about it. Which is why, you know, here at the Money Collective, Mel and I have put our heart and soul into developing our 8-step program.
We have,
which will help people uplift their financial well-being.
Yeah, so the 8 steps, we're going to talk you through them today, but they took us, well, combined 50 years of our own experience in working with people to go, hey, how do you move from here to here?
Yeah.
And at first we thought that everyone was different, and that we had to deal with every client.
Yeah, we're trying to tailor and be really bespoke, and
everyone's going to have their own journey. But it turns out that there's actually, you can have 8 steps and they apply to everybody, no matter how wealthy you are.
It doesn't make any difference, and everyone gets
for everybody.
Benefit out of it, and you can apply all your own personal stuff to it. So it is tailored to you, but the steps relate to everybody.
And I know that some of the things that we're saying, you know, particularly around, you know, being in hardship or not feeling great about your money or not managing it well, but these 8 steps are for absolutely everybody. Like, you could be earning hundreds of thousands of dollars and be feeling great. These 8 steps you'll probably resonate with it. If you're actually doing well with money at the moment, you'll probably doing some of the things that we're going to talk about in these 8 steps. And there might be some things you're not quite doing which could elevate you further. Yeah,
it's so true. When people think, and I just want to put this myth to bed, people think when they think of financial well-being, they think budgeting or financial literacy. Financial well-being is holistic. It's much more than that. As I described, it's how you feel about your money, and it's what the impacts you can do to feel better. And that's just not setting a budget. that is not what this is. This is looking at all aspects of your life and how your money works for you, and the system, as I said, and how, you know, that we work in, and understand it, being empowered to make your own decisions, and be really deliberate about it. Yeah.
So do we want to talk about each of the steps?
Yeah. Okay. Step 1.
Yeah, so the first step is your vision and purpose. And so this is the soul, really, isn't it? So it's like about you. This is the thing, the step that's all about you and nothing about anybody else.
That's right. It's, you know, 2 things is, what's the reason that you would actually even tackle this stuff? You know, why do I want to uplift my financial well-being? Well, it might be I feel really bad and I can't sleep at night. That could be, you know, your reason to do something different. It might be that you're worried about those scenarios that could happen and you don't know what you would do if you lost your job or you got sick, or how you would make ends meet and keep, you know, food on the table and a roof over your head.
That might be because you want to go on a holiday.
It could be. It could be a goal.
Car. I don't know.
Absolutely could be. It can be short-term or long-term. I think that's really key. It could be right now, you know, you've got one of those economic times that are going on where inflation's going up, and cost of living, and, you know, our food bills are going up, everything's going up. So you feel like you're just not saving what you want to, or you're just not getting ahead, or going backwards. You might feel like you're going backwards.
Or you feel like you could just be doing a bit better.
Just in general.
Could be doing better.
I want to be the best version of me that I can be, because these steps and these skills are things that we should do throughout life, not when things get hard or bad. I mean, that is a good platform to get started, but it's throughout your whole life, because then you'll ride these waves much more seamlessly.
Yeah. So that's purpose. But the first real step is vision, right? So vision, what is your vision for your life? And this is the thing that is like you and no one else. It's when you really dream about the life that you want, what do you see when you close your eyes?
Yeah.
Is it your family? Is it what good memories are you making? That's usually what it is. So it usually isn't monetary at all. It is the feelings that you want to live your life by, the values that you live your life by, like what's super important to you. Like Darlene and I are always going to be talking about our families and this business. They're the things that we're passionate about. And they're the things that we want to create, the things that we want to devote our time, energy and money towards.
That's right.
But what are the things that make you sing? What are the things that make you really happy? Because that's the leading thing that you never want to lose sight on.
That's
because
right.
when we lose sight of our own vision, then we start looking elsewhere and we start thinking about really consumable things like cars and clothes and makeup and
stuff that doesn't really matter.
Stuff that at the end of the day doesn't matter at all.
Right, exactly.
It doesn't matter what kind of car you're driving at the end of the day.
That's right. And later on you really regret doing some of those things maybe. But yeah, vision is, because if you've got it, you'll naturally move towards it, or you'll look at the steps to move towards it.
That's right. Yeah. And we forget about our vision all the time, and we get lost because there's so much going on in our life. So we have got to keep that very clear vision. And then the purpose links into that too, because it's like, well, hang on, that's my vision for my life. That's where I want to be going. But I'm not currently heading that way. So my purpose for working on my financial well-being is to get closer to my vision for my life all the time.
That's ideally the answer before step 1.
How do you
get closer to your vision?
How do you always get closer to your vision? And it's easy then when you're making financial decisions, right? So especially big or small, it doesn't matter.
Yep.
When we need to learn to let go of something or something that's not serving us, we can test it. Is that aligned to our vision or not? Is buying that, I'm going to use that car again, aligned to that vision? Is it helping us step closer to that vision or not? And so that's our guiding purpose all the way through forever and ever and ever. And that really vision can change and grow.
Of course. Yeah, but it is always coming back to that. Yeah, am I moving towards
my vision?
That vision. And yeah, and it keeps moving you forward, and optimism is very linked to financial well-being. So by moving forward, we feel more optimistic.
That's it.
Yeah. So then step 2
is doing a spending review.
Oh, it's the best thing ever. Not. Oh, it's tedious and it's a chore, but it's very necessary. In fact, it's the most important thing.
It's the most. It's the worst and best at the same time. Yes. It's what we never want to do. We never want to know where our money's going. So a spending review is exactly that. You've got to go back and find out where all your money's going, right? So a lot of people go straight to sorting out a budget. We're not doing that, guys.
You won't uplift your financial well-being because you haven't tackled, and understand what you're doing. Yeah.
We need to get real with who we are and what we're doing. And even if that is completely light years away from the vision that you want from your life, we need to stare it down the barrel and look at what we're doing.
Pretty cool. You learn so much by doing that, and you've got to go down that path to set new things moving forward and leave some of it behind and, set up new. And then, really important. Do the spending plan, got to do the work.
Yeah. So a spending review is actually going in and looking at the last 12 months of spending. Where have you spent all of your money? So if you think about the net income that you've had in your family, it's probably, I don't know, could be over $100,000 coming into the family, could be hundreds of thousands of dollars. Where are the dollars? Where is it gone and what's it been spent on specifically? So on our website, we've got a tool and we can put it in the show notes, the spending plan review. And what it is like a long laundry list, but you need to go into your banking, download your transactions, and then line by line categorize all of your transactions. Banking's quite good nowadays to help. Like your banking will do some automatic categorization for you.
Do stuff for you.
But you've got to go in and check that, and then you've got to add it all up and annualize it and work out where the money's gone.
Take the thought, do the thought while you're doing it, because if you do it manually and do it properly, then you'll learn a lot.
And we thought there's got to be an easy way of doing this, right? And you can just download an app, and because there's spending tracking apps.
Sure.
But at the end of the day, what do we always come back to?
An Excel spreadsheet, Mel, because then we can see trends and lines and we can actually understand our behaviour better. You can't, A to B, the quickest A to B path is not always the most helpful.
It's not. So getting stuck into it and looking at it. And so with the categorizing, when you've done that task, you'll be able to see, you probably know where your blowouts are anyway, and you go, right, well, I'm overspending on eating out, takeaways or whatever. But sure, you might know that, and when you do the task, it might say exactly the same thing. But when you've done it, you'll see exactly how much. You'll know the dollar amount. And then well, hang on, I'm happy with that, I'm not happy with that. How much do I need to change? It would show you whether all your spending is aligned to your vision as well.
Exactly. If you're a smoker, for example, and you think, oh, that's just who I am and a part of that, and that's totally cool. And then you do the numbers and you'll know really how you feel about that thing, because you can look at the number and say, oh, yeah, I'm comfortable with that, and how much, of my income goes towards that. Or you might not. And it might really be triggering. So
that's right.
It really gives you a sense of what you really do like, where your money goes or not, and just how you feel about what you see.
So being drunk might not be my highest value, but my alcohol spend might be too high.
Oh, yeah.
Maybe.
When you see the number, does it align with how you feel, or is it not?
Yeah.
Making you feel great.
And this is how it's very linked to our mental health, our physical health, and how we want to, our money. So it was going to paint a picture of 1,000 words.
Yep.
And it will help you have better conversations too, because instead of going, we're doing too much, we're spending too much, it's like, no, we just spent $25,000 on something that we...
Yep. And, I'm happy to, share, the thing that I know that I hate looking at the most when I do this stuff is how much I spend on clothes. So why does that make me feel like that? If I go and spend and I like what I buy, but when I look at the numbers, I don't like it, it's telling me there's a misalignment. There's something going on because I don't like that,
Yes.
So, yeah.
Sometimes we feel shame about some things and guilt over some spending, but sometimes you can go, right, well, hang on, I do have a value of clothes. I'm not happy with that amount, but I'm happy with some. I don't want to spend that amount, but I'm happy to spend this amount.
Yeah.
Because I don't want to stop buying clothes altogether, and I don't want to feel bad about buying clothes.
Exactly. And I think those habits, like there's part of it obviously you enjoy, or me, I enjoy about that. So if you go cold turkey, I know some people can break habits, go cold turkey, but that is rare. You're actually got to step down little by little bit as well. Be kind to yourself, I think. Until you figure it out.
And own your values, because nobody else shares the same values as what you do. So, just think, and then it shines a light on our habits too. Are we doing, if you've got lots of late night purchases in there, is that something else emotional going on?
Is it really the thing you're buying?
Money, so cool.
And it's like, what were those feelings, or maybe an argument with your partner you just had, or I don't know, whatever.
So when people do this exercise, they go, geez, that was hard, didn't enjoy doing it, but I'm so glad I did.
We hear that every single time. I've never seen somebody do it and regret that they
have done it. Never.
Not ever.
Yep.
No. So key. Step 3, I'm conscious, we will do more deep dives into each step in future podcasts as well.
Are you rating me in, Darlene?
Rating you in. Come join the TMC family, everybody. My financial position is step 3.
Yes.
So this is starting to consider your financial resilience as well. So when we talk about that, understanding your financial position is your assets, your liabilities, and your income and expenses. And your spending plan has started to look at income and expenses.
Yep.
But assets and liabilities, and your net asset position, which is assets minus liabilities, understanding that number, whether you're comfortable with that number, how diverse your assets are, what sort of liabilities you have, really understanding that, and understanding which parts then you can leverage to move the dial of financial well-being.
Because your resilience that we were talking about earlier is dependent on your asset and liability position. Like, how much do you have versus what you owe and what's left over? And
because it can also change cash flow, can't it? You don't have to pay a debt back anymore, whatever that monthly repayment is.
You can go and
put it somewhere else.
Yeah, grow other assets. So knowing where your money's going and whether it's being helpful and wisely used and helping you grow that plan for the future.
Yep. Yeah, definitely. And then we're up to step 4 is
goals and actions.
Yes.
So once you know all your positions, so what you've done is taken a really deep dive into where your money's going. Are you happy with your asset and liability position? You understand what your vision and goals are. So you know what you want and what needs to change. Now's the time to start writing what you want, what the goals are, and what the actions and priorities are, because you know how much you're working with and what needs to change and where you want to be going.
Yeah. And actually what is realistically achievable, that you can set really time-bound goals. And
that's it.
Or,
So it's a great time to do it. And it's
absolutely,
you couldn't have done it before. You've done this work beforehand, so you've got to do the pre-work to get to the goals and the actions.
Yeah.
Then the next step after that is financial education.
Yeah.
Right? So why do we need to do that at this step?
Yeah, so financial education is really important this is about looking outside in and then overlaying it to your own personal situation. So from a bank, so think about banking products that you probably currently engage with. So, that could be, an everyday account that your pay goes into. It could be a credit card, it could be Afterpay, it could be a home loan. If you've got those products, you should absolutely know how they work. Because if you don't know how they work, then you don't know whether they're actually good for you or not. And you also don't know how you can optimize your money to get the most out of those products. So really understanding those, or any then potential ones that you're thinking about engaging in, understanding the terms and conditions, how interest is calculated, when is it charged, how do I
optimize my money in all spaces to get closer to my goals?
Exactly.
Because you've just set your goals and your actions, but if you don't educate yourself on what you need to do to hit the goals, that's how to really get the most out of where you're going and every dollar and dime that you've got.
Exactly.
And how to make decisions.
Yeah, because there's lots of things, and I won't go into all the details now, but there's lots of things you can actually do. And using, the home loan as the obvious one, is if you have a home loan and you do certain things like pay more regularly, pay extra, those type of things, you can save years and years of interest. It is a lot of money. Yep. So if you're not utilising those, or even offsets and redraws and those type of things, then you've got money sitting elsewhere. You're not using it to your best advantage. So you need to understand how it all works, and then make the best decision for you about, what products and where your money sits.
That's so cool. So at this stage, we've got a vision for our life. We know where our ins and outs and our money is going. We've got our goals, and we know how to optimize that. The next step is to create the new budget.
Yeah, because you've got all the information now. We just need to set the system up to work.
So that's step 6. I had to count that. Step 6 is setting the budget. So this is where people usually go, but can you see now why you need to do that pre-work to get to a budget?
You can't just go to step 6.
You can't just start at step 6.
It's so much easier if I don't have to do the 5
that is what is going to break everything for you, and you will wonder why nothing ever worked. But when you set your budget up, you're not going to get it right anyway the first time. It is a trial and error situation.
Yeah.
And so what you want to do is just align all of your, spending, and decide on where all your money is going, being very deliberate at this point for all of your money. So we advocate...
including your leftover money.
Yeah, any leftover money. So all the money that's coming into the household, you are now being deliberate on where that's going. So you need to pay your everyday expenses, have some fun, save for things in the future, and then save for the really long term as well. So depending on how much money you've obviously got to meet the necessities first.
You do. Yeah. Step 7
is your banking structure.
Yeah, so that's setting up that structure and the bank accounts to optimize all that situation. So you're making that, it's the system. It's the system. So there's money where you need it, when you want it.
Yep. So it automates everything. So again, it's that deliberate, where is my money going? You actually set the right bank accounts up to pay for everything, so that the money is automatically going towards the goals that you have set for yourself. Yeah. And it's the coolest feeling when you get it done.
Well, that's about that moving forward, creating resilience. You actually feel like you're moving forward, and you're more in, we don't like the word control, but you're more empowered about the money, and it will help you sleep at night. It's one of those key things.
And this is what I've been talking about in some of my home truths in earlier episodes, is like my system is a little bit out of whack at the moment because cost of living has gone up. So my automations aren't quite right. So it's like a living thing that you need to kind of adjust all the time, and that's okay. Because this is the thing, because life is going to change all the time on you.
It's no different to
the
analogy
goals are going to change.
Health and diet and all that. We are constantly tweaking, getting up, having another go. Sometimes we're working on it more than other times.
But when we've optimized our system, we know it's going to help us sleep better at night. Yeah. It's like, well, hey, look, you might be in a crappy situation that you don't want to be in right now, but at least you will know that you've done the best that you can, and that's going to help you sleep better. And then you're going to have to start thinking about what other things you're going to do, or it's going to help you just optimize the whole thing, and you're going to be going to bed going, I'm a legend. I can't do better than what I'm doing right now.
I am moving closer to that vision.
Yeah.
Happy days.
It's so good.
Yeah, and I think, you go.
I was going to move on to the next step. So if you've got something to say.
I was going to say, once you get to this stage 2 and you've got a system that you follow, you're in a really good position to use it as a decision-making tool. So if something comes your way and someone's offered you a great job, and you think, other than all the emotional feels and whether you want that as well, but you can overlay it from your money situation, and you can substitute in and out of your new budget and look at what it's going to do to your new number,
Yep.
And is it worthwhile? All that effort, or extra responsibility, and how you feel about stuff, you can also overlay that and say, financially it's good for me as well. So you can use it for decision making.
Yep, it's awesome for decision making. And the last step is tracking and reviewing your results. So this is about what I was saying, like, is it working? Is it not working? And sometimes when the system's working, it's working, it's humming, you don't really need to think about it. And then if it gets a bit broken, something's not working. So it means that a goal needs to shift, basically, because you're robbing Peter to pay Paul. Is that the situation?
That's the saying.
So what you had set up and as your goals and priorities is going to slightly change, which means it might take change time frames of how long it might take to hit something.
Definitely. And when you track over, we would recommend, each month, look at your bank account statement, put it in the actual spreadsheet against your budget, and do that. And in a few months, you'll start to see trends as well. Like if you're constantly over in one spot and under in another, or maybe you just haven't allowed enough. Cost of living is going up, supermarkets going up. Maybe you just have to allocate more to that and take some, as Mel said, off the goal. Constantly reviewing
or less
that
discretionary spend, or
at least every few months.
Just be happy with it. And at least you know the situation and what you're doing. It's clear in front of you.
That takes the fear out because you're dealing with facts.
So good.
That's it.
So that's our 8 steps to financial wellbeing.
That's right. And
Just do that.
It's not a line though. It's more like a circle. It's not a linear. I do 1 to 8 and my world
done.
is great.
No way.
It's not. It's continual work. You have to do it for life. You'll have to keep revisiting.
Yeah, sorry about that.
Going through the steps,
It is. It's like anything great. We've got to keep working on it.
Yeah. That's it.
Cool. So we have a question today which came to us around concern around hardship.
Yeah, we do some work with some organisations and financial education.
And they were worried about this.
Yeah, and find out how to teach. We teach financial wellbeing to workplaces. And this question came from they're getting inquiries from some of their employees and team members.
Frontline staff.
About financial hardship. So that could be, what do I do if I, can't make the mortgage repayment?
They're worried about their staff not having enough money to eat, coming to work hungry, those type of things as well.
Yeah. So it was a really good question. So what would you do if the very first thing you can't, don't think you can meet the mortgage? We've just gone through 8 steps. Like we would definitely recommend, knowing your number. So going back, doing your spending plan, really work out what is affordable and what's not. Have you got anything you can call on, or what can I do and what can't I do? So understanding that situation, first of all, is definitely your number one spot. But then because you might need to ring your bank and have a chat with them about what they can do to support you through this time, and that conversation's going to go so much better
the earlier you
get onto it, before you miss a payment.
Yep.
And also if you come with the knowledge of your numbers and what your situation is and how you can how much you can afford to pay. Maybe it's a partial repayment, for example, or how long you need before you can get this back on track, then they'll engage and enter into an agreement with you to support you through that. And that can be sometimes with the banks, you can actually have like what's called a repayment holiday, and you can get up to 3 months of that.
You always have to pay it back, and there's always going to be consequences to that, which you really need to understand what they are.
Yeah.
So because a holiday sounds great,
it's only for that very short window of time.
Yeah. And you'll still have to pay it back, and it could impact your credit rating as well.
Yeah.
So understanding all of those things, reaching out to a mortgage broker is good in this situation. Anything to do with a home loan or mortgage, even if you didn't get your home loan through a mortgage broker, then you will find the mortgage broking community to be so amazing
and supportive.
Yeah. And great advice can be found there that's independent of the banks as well too.
Yeah.
Especially if you're feeling bamboozled by the situation, is to keep reaching out so you find good support.
Yeah, and that is key, to try and work a strategy out and what not just this immediate one payment or whatever it might be, up to 3 months. What is the strategy out? So, a good mortgage broker, or the type of work that we do.
The other really good resource is the National Debt Hotline.
Yeah.
That is a great website. We'll put the link to that in the show notes as well. And almost everything that you need to know is in there. So take some time to go through that website.
I actually have a really good stepped out, 1, 2, 3, 4, 5, 6 So yeah, that's a really great resource. But I would like to say, I think people get really concerned, and there are some risks to understand. And this is about financial education. So if I go in and, ask for a repayment holiday, what are the consequences? I might not be able to refinance for 6 months or longer. I might impact, if it goes on long term, I might impact my credit rating. But you don't want to be fearful of that stuff. You want to step into it.
That's right.
And learn about that stuff.
That's right.
And whether or not you can tackle it and work through it is really, really important, because I think out of fear, comes back to that again, we don't do anything because we are so worried about what the bank might do. Maybe they'll foreclose on my house, right? And that won't happen. It's like anything. The earlier you engage, know your information, work with them, they'll be supportive, because the last thing a bank wants to do is sell a home. They just don't want to do that. Yeah. And the regulations and your rights are really well protected in Australia. So,
really, I would say the last thing I would say on that note is to know what your end game is as well. So you're in a painful situation right now. How are you going to get out of it? Something needs to change, and things may need to be sold. So potentially the house being sold, maybe, so other assets, and calling on friends and family maybe for support, changing your income position. You really need to be very strategic about getting out of the situation and how long it's going to take. It might mean changing your housing situation or a lifestyle change in some way. That's right. But really planning it out, writing it down, knowing your numbers. What are you doing that can change?
Exactly.
Have you got a liability or a car loan? If you sold the car, is that going to fix something? I know you might need the car to get to work.
Yeah, that's right. But it's weighing all that up in your strategy, right? And the thing is, be empowered and take control of the situation, because you don't want something done to you. If you left it too long, the bank might, decide to sell a house. That would absolutely be a last
You want
resort.
to be in the driver's seat.
You want to be in the driver's seat. Do it on your terms. It's your self-esteem, your confidence, your well-being. Do things, you make the decisions. Do them on your terms. And that's what actually, understanding it will give you, and you'll feel better about yourself at the end, no matter whatever. Yeah,
that is good. So we might just wrap up and leave you with one last question, and that would be, what are all the things that have led you to feel how you do about money? What's your story with money?
Yes.
Yeah.
It's deep.
It is deep. Because we learn all the things we do and the way that we behave is basically come from all of our past experiences. So what we learnt with our parents and as young adults and as we've continued through life. So,
and do you like the beliefs you have? There you go. Have a think about that. Ponder.
Good. Do you love, like your money beliefs? Well, thanks for joining us this episode, and we will see you next time.
See ya.
Bye.
At The Money Collective, we provide financial wellbeing premium coaching, mortgage broking and workplace financial wellbeing programs, which we couldn't do without the seamless support of our fabulous team.
If you'd like to find out more, head to themoneycollective.com.au or our socials to take action and engage our services. In our Facebook group, join the conversation and help us break down the taboo around money.
All content in this podcast is for educational purposes only and is general in nature. For tailored personal advice, please seek out a professional.